So good morning everyone. For today's discussion, we'll be talking about Chapter 3 of your Managerial Economics Applications, Strategies, and Tactics class. So Chapter 3 is the start of the Part 2 of Managerial Economics, which talks about demand and forecasting. So this is just an overview of what part 2 is. So you have here those that involve economic decisions and analysis, which includes demand analysis and forecasting, production and cost analysis, pricing analysis, capital expenditure, which we will be discussing in future chapters. Aside from that, we also have the political and social environment, which includes your business conditions, factor market conditions, competitors' responses, external legal and regulatory constraints, organizational constraints. So these things will be talking about their effects to their cash flows and also the related risks and their overall effect to the firm's value or your shareholders' wealth. So let's start again, or let's formally start Chapter 3, which is about the demand analysis. So demand analysis serves three major managerial objectives. So first, it provides insights necessary for marketing teams to effectively manage demand. Second objective is that it helps forecast unit sales to inform operations decisions. And lastly, it projects the revenue portion of a firm's cash flow stream for financial planning. So that is why we are discussing the theory behind demand analysis. So under this chapter, you will know, or you will be introduced to the theory of demand and the concept of elasticity or elasticity properties of the demand function. So that is why, as you can see here, you have the price elasticity, the income cross elasticity, and the combined effect. So those topics will be our main point or main subject matters that will be discussed for today. So to start, let's have a brief recall again on what demand is and the demand schedule. So this was already briefly touched in the previous chapter. So again, demand schedule is the simplest form of the demand relationship. So it is merely a list of prices and corresponding quantities of a product or service that would be demanded over a particular time period by some individual or group of individuals at uniform prices. So table 3.1, which I will show you later on in the next slide, shows a demand schedule for gasoline. So as you already know, there is an inverse relationship between your price and your quantity demand. So let me change first. So again, there is an inverse relationship between your price and your quantity demanded. So this is then, or is also referred to as your law of demand. So you will see in the next slide here, as you can see, as your price decreases, your quantity purchased, or the quantity demand increases. So that is why, or this shows the inverse relationship of your price and quantity. So again, you already know this, no, in our previous chapter. Now, the demand schedules shift when one determinant of demand changes. The determinants mentioned here was already discussed in the previous chapter. Diba? If you can remember, those include the changes in income, changes in population, changes in future prices, diba? Those changes with relation to your complementary or substitute goods. So those determinants mentioned in the chapter 2, again, they shift the demand or they shift your demand schedule. So for example, you have here an example. As you can see, in 1999, the gasoline prices were at $2. With that, Ford sold 428,000 units. Now, by 2007, as you can see, there was an increase in your price by 3.5. With that, the quantity sold of Ford decreased to 127. Now, by 2008, again, there is another increase which resulted to Ford selling fewer than 30,000 units. So, as you can see here, diba, the increase of the gasoline prices affected the number of units sold by Ford, because with that, di ba, unsa man imong makonclude, you can conclude that the gasoline and the unit or cars are complementary goods, di ba? Of course, complementary sila kay dili man nimo magamit ang sakyanan kung walay gas, di ba? So, mao na siya. Now, next here, this illustrates the previously discussed examples. As you can see here, in 1999, this was the graph of your demand or your demand schedule. Now, it shifted to the left. So, kanina ang bag-o niyang graph no sa 2007. So, as you can see here, from 420,000 units, nahimo na lang siyang 127,000. So, again, it shifted from the right to your left. Next is a constraint utility maximization and your consumer behavior. So demand is based on the theory of consumer choice. Again, consumer choice. Of course, diba? Ikaw consumer, your demand is magdepende man siya kung unsa imuhang ganahan. So that is why if you are into that certain product at the moment, of course you are intending or you have the intention to buy that specific product, thus increasing the demand for that specific product. So ano na siya, each consumer must choose among combinations of goods or services that maximize satisfaction or utility, which is still subject to a constraint on the amount of funds available. Now, economists have identified two basic reasons for the increase in quantity demanded as a result of price reduction. So you have these two reasons. First is the purchasing power. So when you say purchasing power, meaning the consumer, since the price reduced or decreased, si consumer is mas daghan na siya og mapalit, diba? So let's have an example to better understand it. So for example, si consumer na ay 1,000. I'm so sorry for the bad writing, but for instance, si consumer na ay 1,000 pesos. So let's change that to a pen. So si consumer is na siya 1,000 pesos. Now, if ang iyahang paliton nga butang is mahog nga tag 100, pila ka iyang mapalit, di ba? Makapalit siya og 10 kabuok of the said product. Now, if there is a price reduction, for instance, mahimo na lang na tag 50, ang imuhang item nga ganahan paliton, instead of purchasing only 10, is 20 na kabuok ang mapalit ni consumer. So, meaning ni saka ang iyahang purchasing power. So, mo na ang first na reason. Now, your next reason is your substitution effect. Now, when you say substitution effect, when the price of your good, for example, you would like to buy a movie or watch a movie, it becomes less expensive in relation to other substitute na forms of entertainment nimo. So, for example, hilig ka mo watch og you have a lot of hobbies, for instance, or source of entertainment like karaoke, or you like to watch movies sa cinema, diba? So, if ang imuhang ganahan buhaton, for instance, ni barato ang ticket sa imuhang movie, so instead of ang imuhang buhaton unta is more ka-leaning towards the karaoke, pero since ni barato man ang movie, so meaning ato kamulin or your demand for movie tickets will increase, di ba? So mo na siya nakay mo na gitawag nga substitution change or substitution effect of price change. So, you are more inclined to purchase that specific good or service kung asa na ay reduction sa iyahang price, even though it is just a substitute nimo. So, mo na siya ang concept, and that explains, or those two explains the basic reasons why there is a increase in your quantity demand. So, next, mo ni siya kung gisika dali. Mo ni na akong gingon tanan ganiha. So, this figure below, again, also shows a shift in your demand, diba? Due to your capacity. So, for example, as you can see here, there is an old budget constraint. Let's change this to open first. So, there is an old budget constraint, which as you can see here, 10 days rayahang rental. So, let me just explain the concept of this graph, no? Kanisha na graph is that it shows that a certain consumer has a budget that should be allocated to housing rental o auto na rental. So, the consumer is going on a trip, ato siya business trip, so he needs to spend for the accommodation o sa kanan nga iyahang gamiton. Now, based sa iyahang old budget, di ba, makaspend siya og 10 days lang. Tanan to ang graph, 10 days here. It's here. Di ba? 10 days. Wait. There. So, 10 days siya nga makaran sa sakyanan if mo stay siya og placed na worth 700 ang cost sa imuhang accommodation. So, stay siya for, again, as I mentioned, 10 days. Oh, this is the extreme, 3 days. 3 days. Now, for example, the consumer is na siya makuha nga, suddenly na siya makuha nga discount. Again, so makakuha siya discount na, let's say, butang na to di, ay nakuha is worth 50 pesos nga discount. So, meaning ang iyang mas-spend sa housing would now be 650 na lang. So, instead nga maka-utilize na siya or maka-laag siya for 3 days, is since tag 650 na malang iyang accommodation, ang iyang mabayaran sa accommodation. So, as you can see here, ni change or ni shift ang imuhang demand schedule, diba? So, ang mahitabo is the consumer is pwede na siya makastay for additional 2 days. So, inana siya ang concept. So, this is just another example. No? Next, we have here what we call targeting, switching cost, and positioning. So, the consumer's desired rate of purchase excuse me, can also be affected by several other marketing decisions, such as targeting the most likely customers, establishing loyalty programs, or carefully positioning the product. So, which we further discuss later on. So, as you can see here, if makanotice mo, if until this formula lang, let me change this, is also parang highlight. So, if makanotice mo, kani nga formula is mo ni siya ang katong naa sa inyuhang chapter 2. Diba? Nga formula sa inyuhang demand. Now, gipuno diri ang katong mga cost na more relate sa imuhang marketing decision. So, this is the targeting, switching cost, o positioning. So, when you say targeting is often the subject of extensive marketing research. This is when you this is knowing the customer well enough to pick the right target customer is a priority in marketing. So since it costs 5 times as much to attract a new customer as to sell to a regular customer. So kani is magmili kag taro kung kinsa imuhang i-target market, diba? So kana siya na kay i-target na customer. So kasagaran isa ang targeting is magamit siya if you are trying to attract new customers. So, meaning, naaba kay mga free taste o di ano mga promotion. So, kana siya, makabaw ka nga sa imong free. For example, sa imong free taste, ang nagsigig kwan is ang mga tiguang, di ba? For example, tiguang ang ganahan na sige naganahan sa imong product based on your free taste. So, at least kabaw na ka nga if you are trying to introduce that product, ang imuhang mindset is ang imuhang target market is katong mga older people kay sila man ang naganahan sa product katong nag-research pa lang ka, diba? Or nagbuhat pa ka feasibility study, for example. So, kana siya. Now, switching costs can reduce the number of substitutes under consideration. So, kani siya is a customer or a consumer of a different product or is your substitute product is imuha siyang pili sa imuhang own product. So, mo switch siya. So, for example, fan ka og winner na dishwashing soap, diba? So, kung ikaw si Joy, unsa man imong ikaw si tagya sa Joy, diba? Unsa man imong mga possible nga i-cost or mga ma-incur na cost para si katong die-hard nga winner fan or winner nga iyang tigamit is mo change siya nga iyang palito na is Joy product. So, ina na siya. Now, the correct positioning of a product in the customer's perception from upscale to down market is important. Now, as purchasing power rises, goods perceived as inferior will lose sales. So, diba, if makabantay mo, if ang tao mo daghan na again mo increase iyahang purchasing power, mas more inclined siya nga mupalit na og mga per se branded na mga stuff, diba? So mo na katong mga inferior products since sa una atong dato ang tigpamalit ang mga wa pa kay kwarta o since na kay kwarta, so mo change na pud ka sa katong mga superior products or mga branded nga mga products. So mo na as a company is dapat kabaw ka asa ka mo position sa imong self if you are catering to middle class, lower class or high class na mga customers, diba? So kana siya kay of course maskin sa brand name pa lang nimo daan is ang masud na ba sa unsa may masud sa huna-huna sa imuhang consumers, diba? So for example moingon ka nga if ang imuhang sapatos kay sa may high-end na sapatos. I don't know, Adidas or like Converse. So, di ba, ang si consumer is mutingnan siya, kana siya is high quality na siya, automatic, di ba? So, inana siya. Kaya of course, si Converse or si Adidas or unsa man ang mga branded diha nga mga companies is ilan namang giput lang self nga mao na ang dapat i-think ni or ilan man giposition nila ang self na mao na dapat ang hunahunahon ni customer or consumer once they think of your product or your brand. So, that is it. Now, this is just an example of things that you need to take into consideration when you are trying to make changes to your organization or sa imuhang mga products nga ibaligya sa imuhang mga target consumers, no? So, for example, here, diba, a hybrid gasoline electric Toyota Prius is priced at $24,000, which proved to be a good aspirant good for something for 20 something. So kaning Toyota is ang iyahang cater is katong mga middle class or mga middle class na mga consumers. Now si Chevrolet is he hopes to capture green conscious young professionals with the Chevy Volt at a planned price point of 33. So meaning mas taas siya kaysa kay Toyota. However, the batteries needed to power the Volt were priced at 8,000 more than unsa ang ilahang expected. So instead of ilahang plano is at 33 ra, mahimong 41 na ang ilahang price point sa ilang Chevy Volt. Now, if adto na sila sa 41 nga mark, ang kinsa man nga mga consumers ang naa dito na range, di ba? So, if adto sila na range, ang 41 is mas duol-duol naman siya sa, for example, given the Tesla that is selling for 52, di ba? So, si consumer is mas mopabor na siya nga mo palit sa Tesla nga 52 since duol raman ilahang diferensya, di ba? So, si Chevy dire is wala siya nakatarong og posisyon kung asa siya, di ba? So, both, example, di man siya makapaubos kay naa naman si Toyota nag-serve ana na market sa kaninga price range. Now, if ari siya nga price range is na naman si Tesla. So, supposedly, katong iyang initial plan at nga 33 would be good. However, lagi, para ma-achieve na niya is kailangan mo siya mo spend og more. So, because of that, na problematic ang positioning ni Chevy. So, dili siya makapaubos. Wala siya place sa ubos. Wala po siya place sa taas. So, ending is, the company may just disregard this kaninga unit, diba? Or kaninga plan. So, kana siya. So, that was the demand. Sa demand relation. Demand nga part, no? Now, let's focus on the mga elasticity concepts sa demand. So, first, we have the price elasticity. So, price elasticity is the most commonly used measure of the responsiveness of quantity demanded or supplied to changes in any of the variables that influence supply and demand function. So, again, that refers to elasticity. Take note of the word responsiveness. So, if there is a change in your price, unsa ang responsiveness nga effect sa imuhang demand. So, mao na siya ang concept of elasticity. So, elasticity is a ratio of the percentage change in your quantity to the percentage change in your determinant. Determinant, again, kabaw na mo unsa na nga mga determinants, taking into account or under the assumption of ceteris paribus. So, take note sa imuhang ceteris paribus. So, ceteris paribus is a Latin term which means all other things remain unchanged. So, muna siya ang concept of your elasticity. So, since we are talking about price elasticity, of course, ang imuhang determinant diri is your price. That is why you have this equation. Again, the change, percentage change, kanang triangle diha, that is your delta. So, nag-signify na siya sa change. The percentage change of your quantity divided by the percentage change of your price. Since again, as I mentioned, price is your determinant here. So, that is how you get your elasticity of demand. So, gusto mo pag percentage change, o kanira, your change in quantity over change in price multiplied by your base price over base quantity under the assumption of ceteris paribus. So, again, muna siya. Muna siya imuhang formula sa imuhang price elasticity. Now, I know you are already familiar with this one because nani sa inyong junior high or senior high. I don't know kung asa inyong microeconomics. Basta, na-discuss na ni ang elasticity of demand sa microeconomics ninyo. So, this one is balikan na niya na nato in another na topic, no? Or in a future na mga slides. We'll go back to it. Okay, so next is interpreting the price elasticity. So, price elasticity may take on values over the range of 0 to infinity, which I know you already know about this. When your demand is when demand is unit elastic, a percentage change in your price is matched by an equal change in your quantity. So, meaning ana, this is equal to 1. Equal to 1. Ang imuhang elasticity of demand. Now, when your demand is elastic, a percentage change in your price is exceeded by the percentage change in your quantity demand. So, this is when your let's see here. Quantity demand 1 is lesser than your ED. I'm so sorry. Which is lesser than infinity. So, kana siya. Now, for the inelastic demand is, of course, it is the opposite, no? So, naman din next na table diri. Dara, sus, nag-drawing pa ko. So, dara. Again, if your elasticity of demand is equal to 1, that is unit elastic. If it is lesser than 1, but greater than 0, so meaning 0 point, kanang point niyas tunga, that is inelastic. Now, if it is equal to 0, that is perfectly inelastic. Now, there put it is elastic if it is greater than 1, and it is perfectly elastic if it is infinity. So, kana siya. Now, unsay mga naong ano imuhang mga perfectly elastic o inelastic, no? In ani na ang ilahang graph. So, when you say perfectly elastic, di ba? What ang sa imuhang price is constant regardless of the changes in your quantity demand. So, mo nang perfectly elastic na siya. Now, kani siya is theoretical lang ni siya, ha, nga makuha kay walay mga product siguro nga perfectly elastic o perfectly inelastic. Kani sad siya is regardless of changes in your prices, imuhang quantity demand kay dili mo usab. So, kani siya diri is fixed ra kuno imuhang price whatever the quantity demanded is. So, kani siya, these are just theoretical, but these are the graphs. Now, para makabang mo sa graph sa Kani sa day. So, that was the mga different values, no? Under the price elasticity of demand. Now, in here, this shows the relationship between elasticity and marginal revenue. So, you have your price, you have your quantity, you have your elasticity, then you have your total revenue and your marginal revenue. So, when we talk about marginal revenue, it is the change in total revenue that result from one unit change in quantity demanded. So, going back, as you can see here, as your as your price decreases, diba? And your quantity increases, so money ang mga computation sa elasticity, you can see here the total revenue. And then sa kinlasan is your marginal revenue. So, pila ang change niya. Now, as you can see here, diba, na kay 0 na point. So, let me just remind you na as to the elasticity, we get the absolute value. So, meaning absolute value, i-disregard rin nimo ang mga negative diri, no? Muna siya kanang pasabot imo kung absolute value. So, here, you have the elasticity of 1. So, muna siya imuhang unit elastic. That is why, as you can see here, every change in your, or kaning nga 5 price and quantity demand of 6, diba, wala siya change in your marginal revenue. So, kana makita nimo. So, anita sa, okay, let's proceed to here. Now, before anything else, let's go back to the one that I said we will go back. Kay mas ari man to siya ma-relate. So, if you can remember sa katong graph, diba, your total revenue here, that is the TR, your total revenue, or the change in your revenue arises from two sources, which is again the change in your price and your quantity. So, money siya. Even if there's a small price reduction, it already triggers a single additional unit. So, morning, kani siya ang formula. Ayaw lang kayo muka-intimidate sa formulas. Kay basically, kanira na ang iyang ending, diba? So, it just states that if your quantity change of your total revenue is equal to the quantity change of your price plus the quantity change of your, not quantity change, rather percentage change of your price plus the percentage change of your quantity, mawala na siya ang total na percentage change of your total revenue. So, for example, you have here, if Johnson & Johnson lowers the price of Band-Aid by 10%, the sales revenue then goes up by 24%. So, we can conclude that unit sales must have risen 34% applying this formula. So, again, even if ni-decrease ang ilahang price by 10%, diba? Nisaka mangyapon ilahang revenue by 24. So, meaning, ang ilahang number of units sold is nisaka di ay by 34. So, more na siya ang inyong hinumduman. Ayaw mo intimidate aning 3.3 o 3.4. More niyang pasabot ani. So, if mo balik ta diri, where was it? Okay, here. So, if mo balik ta diri, as you can see, your percentage change in your total revenue, your percentage change in your total revenue is just the percentage change in your price plus the percentage change in your quantity demand. So, mawala na siya. If inyo nang isolve, mawala nang magawas. So, ano na ta sa inyong marginal revenue? Now, again, marginal revenue is a change in total revenue that results from 1 unit change in quantity demanded. So, diba, intimidating na sad kaayo tan-awon ang formula. So, basically, your marginal revenue is just your change in total revenue divided by the change in your quantity. Kung maingon ganitag change, ingon ani na ha, your quantity, your second quantity or katong new quantity minus the old quantity. So, mura na ang pasabot na dinhi. So, that is how you get your marginal revenue. Now, if we derive na siya and everything. So, if you can see here, it is so small, but let's just try it. So, this is your first nga price number 1, and this is your quantity number 1. So, you have here point A. Muna una, diba? You have your point A. Then, your price decreased. Nahimo siyang P2. With that, your quantity increased to Q2. So, imuhang point ni move na siya or ni shift na siya dinhi. Now, with that, if makanotice mo, there are 2 areas that are shaded. Diba? Kaning rectangles. This rectangle and this one. So, the horizontal shaded rectangle is your loss in revenue. So, of course, from P1 to P2 good. So, di ba ni ubos siya? So, this signifies the loss in revenue. However, your vertical na shaded area, this signifies your gain in revenue. Kaya again, from this number of quantity, nahimo naman siyang inani kadaghan. So, ang imuha raani is that imuharang itanawon kung pilang ihang general effect sa imuhang total revenue given this loss o given nga this gain. So, more na basically ang imuhang marginal revenue. So, again, what is the total change or what is the change in your total revenue given that you were lowering the price, which resulted to an increase in your quantity demanded. So, ano siya? Basically, more na siya ang concept sa imong marginal revenue. So, so, kana siya. Inumdumi lang gihapon ni ninyo ha, kay sa mga problems, of course, ihatag mo na ang imuhang new quantity, imuhang old quantity, imuhang new price, o imuhang old price. So, just still take note of this expanded na formula. So, if we rearrange this formula, if we rearrange it, you will arrive at this you will arrive at this what do you call this formula sa imuhang MR, diba? You have your P2 or your new price multiplied by 1 plus the quantity change of your P times Q1 over the quantity over the change of your quantity times P2. So, kana siya. With that, okay, so so you have here the ratio term is the inverse of the price elasticity at the price point P2 using quantity Q1. So, for a small price change, for a small price or quantity change, the number closely approximates the, what do you call that? Wala na yung appeal, pero doon siya sa if magkuha ka sa imuhang arc elasticity of arc price elasticity. So, If i-express nimo are algebraically, so mao ra gyapon ni siya. Your P is 1 plus 1 over your elasticity of demand. So, kana siya. Kaya if we basically think about this, mauro ba gyapon ni ang katong sa imuhang elasticity of demand. So, yun na siya. If imuha ni siyang ipang-distribute, kana siya. Mauro gyapon ni nimo. So, if given, there is an example, you have a $34 pair of lead jeans with an elasticity of demand of negative 1.33, would have a marginal revenue from lowering price to achieve one more unit of sale equal to 8.50. So your formula is your 34, which is your price, then your elasticity of demand. So makuha nimo ang 8.50. So using this equation, one can demonstrate that when demand is unit elastic, marginal revenue is equal to 0. Again, take note of that. When your demand, itong i-highlight, is unit elastic, marginal revenue is equal to 0. So, kani, diba your unit elastic is your demand is equal to 1. So, ang imong MR is 0. Which, again, is makita siya dito sa table. Balik ta, diba? Dire, see? Your marginal demand is 0. Your elasticity is 1. So, kana siya. Regardless of the formula nga gamiton class, pares ra gyud kag ma-arrive nga solution. So, kanilang is, again, you still need to remember these formulas kay magdepende man na ang formula sa kung unsa nga mga items or unsa nga mga amounts ang given. So, in this case, since if you are only given the price and the elasticity of demand, of course, you use this formula. But if what is given to you is the old price and old quantity, and you also have the new price and new quantity, so pwede kani nga formula inyong gamiton or kani nga formula, diba? Again, mag-vary siya kung whatever is given. Regardless, you will still arrive at the same MR. So, the importance of elasticity revenue relationship. Now, elasticity is often key to marketing plans. A manager will try to increase sales revenue by allocating budget among price promotions, advertising, retail displays, and trade allowances. So, firms should seek to raise prices for products discovered occupying the inelastic range of their demand. Ngano man, inelastic man siya. So, even if there is a change in price, the responsiveness of your demand or the change of your demand is dili kaayo inana kadako. So, unsa may mga example ani? For instance, kanang mga highly needed na mga items. So, saman atong ma-example. For instance, kanang oxygen tank, diba? If na kay relative na nasa ICU baron, maskin mo mahal pa na ang imuhang oxygen tank, dili man ka pwede mo ingon nga ay di lang sa tamo palit og oxygen tank karon, di ba? So maskin mo mahal pa na siya, you still opt to buy an oxygen tank. So ina na siya, meaning even if there's a significant change in price, the demand is gamay ra ang ihang change nga mahatag sa imong demand. Mao na ang firms is ganahan sila i-raise ang prices for those products nga inelastic ang ilahang nasa inelastic na elasticity of demand. Now, to lower prices in such a range would be double dump, meaning increasing cost and decreasing revenue. So, kana siya. Now, if we can see here, kanipod is opposite pod siya, no? If your product is highly elastic, again, highly elastic imuhang product. So, even if there is a small change in your product, is dako na kay siyang effect sa imuhang demand, diba? Dako na kay change sa imuhang demand. So, mo po na ang tanawon or bantayan ni management. So, this is an example. So, kani. What are the factors affecting the price elasticity of demand? So, we have here 4 factors nga giingon. First is the availability and closeness of substitutes, the percentage of the consumer budget, the positioning as income superior, and the time period of adjustment. So, let's talk about the availability and closeness of substitute. So, in here, let me change first to a pen. So, in here, even or if your product has a greater has a greater number of substitute goods, meaning it is more elastic. So, as I mentioned ganiha, diba? Elastic siya again if mas daghan ang substitute sa imuhang product is ang iyahang kuan is elastic, iyang demand. Nganuman, for example, mo mahal og kalit ang imuhang paliton nga brand sa, let's say, toothpaste, di ba? Since daghan mag-substitute or daghan mag-other brands sa toothpaste. So, si consumer, ikaw as consumer is ato na lang kamo palit dito sa lain, di ba? So, meaning kung mas magkadaghan imuhang substitute or mas daghan kag mga available options for a certain product, mas more elastic siya kay mas dako man ang tendency nga si consumer mobalhin dayon siya sa substitute. So mao na, as I mentioned ganina, masking gamay nga change is dako na ang impact niya sa imuhang demand, di ba? So muna siya example sa or muna siya pasabot sa availability and closeness of substitutes. Now, again, balipod siya ha sa akong giingon nga if kung wala kay substitute, of course, inelastic siya kay wala may choice si consumer kundi mo palit gyapon sa imuha. Kay again, wala may siya substitute or gamay ra kaayo ang ihang substitute. So, kana siya. Next is a percentage of the consumer's budget. Now, the demand for relatively high-priced goods tend to be more price elastic than the demand for inexpensive items because expensive items account for a greater proportion of a person's budget. Now, consequently, I would expect that the demand, for example, a housing or kana apartment, to be more price elastic than the demand for, let's say, a children's toy. So, or any other kana mga minimal na cost na imuhang magastuan, di ba? So, again, the greater the percentage of the budget spent on a good, the larger the purchasing power released by any given price reduction or absorption by any given price increase. So, the larger the income effect, the greater the price elasticity for income superior na goods. So, if parehas ta rin siya sa akong ang giingon ganihang katong if na kay kwarta is mas mo lean ka towards buying more superior na nga mga products kay since mas dako naman ka og budget. So, for example, the part of your, let's say, budget is ato sa imuhang mga needs, di ba? So, ang kanang mga needs, if naaga ni siya let's say, if nagay mga changes sa imuhang mga needs is wala man kay takas sa imuhang mga needs. So, meaning, dili nimo ang mag-adjust niya is ang imuhang katong mga wants nimo nga part. So, mo na siya. vary gyapon siya kung elastic or inelastic ang imuhang needs or wants depende sa imuhang budget. So kana siya. I hope nakasabot ra mo. Next is the positioning as income superior. So when how a product is positioned to the target customers has much to do with whether the release in purchasing power associated with a price discount will result in a substantial, moderate, or trivial increase in unit sales. So kani siya is, how do I say this? For example, kay for example, ang product is, di ba, atong akong gi-mention nga naay mga brands nga nag-serve sila for lower class, middle class, or upper class, di ba? So ilahan nang gi-position ang ilahang selves. Now, if there is a sudden decrease in your, what do you call that? If na sudden price, let's say, price discount, so meaning, na siya sudden price decrease, since your positioning is not sure, atong ikuan bigay para mas understand. So, di ba you have here your lower, let's say, middle, and high. So, kani sila is, muna na ilahang mga positions, no? So, for example, si high class na brand is mo discount siya o kalit. So, meaning, if mo discount siya, mo equal, mura na siya mo patas ari sa imuhang middle na level. Now, even if mo medyo patas na siya diri sa imuhang middle na level, walay assurance nga the consumers would go for your product. So, dili, again, as mentioned, ang iyahang effect sa imuha is, sa imuhang demand is trivial siya, or dili pa sure if, again, maato ba sa imuha ang consumer or dili. So, mura na siya ang pasabot niya, no? But however, in reality, or if maka-observe mo, most likely, people would shift or ato sila mo palit sa katong mga nasa high unya ni nag-discount. Kay again, di ba, the name of the product or the brand of the product palang daan is nanabaya sa humot na baya sila. So, di ba, maingon ka nga, kani nga tao is nagsuot ni ani na brand, di ba? Pero without you knowing di ay nga sale day na niya gipalit, di ba? So, inana siya. So, ang iyang elasticity pag balhin niya diri is naka-affect siya, or the price decrease affect the elasticity even for those na sa kaning middle na level. So, inana siya. Affect siya kay ni shift man ang instead of ibutang to or dili kayo super elastic, di ba? Since mas nidaghan naman noon sila diri sa middle na level, so mas ni-increase ang elasticity kay mas daghan mag-substitute. Nya given pag yun nga na siya superiority daan kay high class brand siya, di ba? Nag-discount lang sa iyang price. So mao na mahimo ng more elastic si nasa middle. Ang last na factor is your time period adjustment. So, to respond to a price decrease, potential customers must first learn about the discount and then incur the cost of adjusting their own schedules to complete a purchase during the sale period. So, because both search and adjustment costs for consumers are higher if sale prices last only a few minutes, the demand response to price change is diminished the shorter the time period of adjustment. So, predictable end of model year promotions. This is an example. In the auto industry, lasting throughout the month of August stimulate more elastic demand than unannounced midnight madness sales that last only a few hours. So kani siya is mas gihatagan, if mas hatagan nimo time si consumer na mangandam sa imuhang sale or sa imuhang discount, di ba? Balik ani nga example. For example, kani si high class brand is announce ang iyahang sale, di ba? So mas dako ang siya announce ang iyang kay mag-sale ko by March 3 inana. So or let's say April 4, di ba? So si katong mga consumers nga naanta diri sa middle, since makahibaw man sila nga hala mag-discount di ay si high class na brand, so sila mas mahatagan silang chance nga makapangandam. So mas more likely nga mo shift sila sa high class na brand, 'di ba? So muna kani siya nga ang si middle class noon is mahimo ng elastic or increase ang elasticity niya kay mas taas mag time period nga gihatag sa consumers to decide, 'di ba, or maka-switch sila. Now, for instance, if ever one day sale lang, one day lang si one day nga unannounced pag yun, 'di ba? Si high class nga mag-discount di ay siya. So, kaning mga nasa middle is dili sila makapangandam, 'di ba? Or uban di sila makaibaw nga nag-sale di ay si high class. So, dili kayo siya elastic or wala kayo changes sa demand sa imuhang brands nga nasa middle class. So, inana siya ba? Muna siya ang pasabot sa time period. So these are just examples, of the goods and their price elasticity. Now, aside from price, na another determinant of demand, which is your income. So diri lang is that instead of the change in price is mahimo na siyang change in your income. Diba? So, maura ang nailis niya. Ang imuhang denominator na diri is already your income. So, if there is an increase in your income, diba? Expected is there's an increase in your price. So, kani siya interpreting the income elasticity. For most goods, income elasticity is expected to be positive, meaning your elasticity of demand sa income elasticity is greater than 0. So, muna siyang tawag na income per good. So, those that are negative are called inferior goods. Now, advertising elasticity measures the responsiveness of sales to changes in advertising expenditures as measured by the ratio of percentage change in sales to the percentage change in advertising expenditure. So, if maka-remember mo, advertising expenditure is also one of the determinants, diba? So, if mag-change na ko sa imong, if padak-an, for example, padak-an mo imong advertising expenditure, pila ang iyahang change nga mahatag sa imong sales. So, more or less, more na dyan siya katong cost-benefit analysis, diba? So, again, dapat mas dako gid gihapon ang change nga makuha sa imong sales given for that specific change of advertising expenditure. So, as much as possible, positive ang what do you call that, ideal result dere sa imong advertising elasticity. Same with your income elasticity, diba? So, kato if mas magkadako ang kwarta sa mas magkadaghan ang income sa imuhang consumers, of course, mas daghan sila mapalit nga mga goods. So, meaning, mas mo decrease ang, not decrease, but mas mo increase ang demand for that specific na goods. So, muna na siya ang sa imong income elasticity. Now, we have here the cross price elasticity. Now, there is medyo challenging siya gamay because you are dealing with two products, but as to the computation is basically it's just the same. You are just taking into account the percentage change in the quantity demanded of good A to the percentage change in the price of good B, assuming that all other factors influencing demand remain unchanged. Now, good A and good B can either be substitute products or complementary na products. So, of course, ilahang elasticity is mag-vary pod kung substitute ba siya or complementary siya, di ba? So, again, this is just the formula. You have the percentage change in quantity demand of product A divided by the percentage change in the price of product B. So, for example, let's have an example. Product A and B are substitute goods, diba? So, unsaon man yung pagkahibaw nga substitute goods siya? Makahibaw ka nga substitute goods siya tungod kay if ang percentage change nimo sa imuhang product B is positive siya, so ni-increase ang imuhang price sa imuhang product B, ni-increase ang price sa imuhang B. Oops, let's erase that. So, let's change the pen again. How do you know if it is a substitute, diba? If there is a price increase sa imuhang your product B, iyahang price kay ni increase, diba, hinumdumi substitute man ka, so meaning kung ni mahal ang imuhang ka-substitute nga good, mag-expect ka dapat nga imuhang quantity demanded diri is no increase. So meaning increase dapat positive ni dire, positive ni dire. Hinumdumi ha, the elasticity is an absolute value. Now, nganong naagyapon siya negative o positive, negative o positive? The negative o positive is mo identify lang na siya if it is an increase or decrease. Mao nang gamit sa imuhang positive or negative. So, increase or decrease ang direction na ang iyahang gi-indicate. So, if positive ni diri, there is a positive increase in your quantity demand, ni-increase siya positive. So, meaning ni-increase imong quantity demand. Meaning, ani niya is substitute ni ang A, substitute products ni ang A o B. Kaya again, di ba, if remember mo sa katong determinants, an increase in your substitute, an increase in the price of your substitute causes an increase in your quantity demand. Kaya of course, sa imuha naman mo palit. So, this is the substitute. Substitute. Okay, sabra na ako yung na. Now, if complementary mga product, of course, opposite siya. So, your A, your quantity, imuhang product, and then B. So, if complementary, again, your product change is negative. Negative niyang imuhang change diri. Meaning, mukos, if your price decreases or either increases di ay kay ma-compare jud din yun diri. If your price increases, it would cause a negative change in your quantity demand. So, kana maka-conclude ka nga si product A o si product B kay complementary goods sila. Kay again, pag-increase sa price ni B, ni gamay man, negative decrease, ni gamay man ang quantity ni A. So, meaning, complementary nga goods sila or complementary products sila. So, inana na ang pag-identify ha, diri sa imuhang cross price elasticity. So, base niya sa quiz or sa exam, di ba, makasugat mo gingon ana if identify mo if the products are substitute or complementary. Ina na siya. Now, unsa man yung pagkaibaw if they are close substitutes or not. So, ari na pud ka if positive niyang imong elasticity dire, diba? This is positive and positive. So, meaning, positive sa na dire ang imong elasticity, of course. So, if ang imong elasticity is magkataas siya, so meaning, the higher your elasticity, here, the higher, the closer na substitute goods silang duha. So, ina na siya. Next is, muna siya kung gichika ninyo, guys. The cross-price elasticity between products A and B is positive. The products are referred to as substitutes. And then if negative, they are complementary. Diba? Advance kay ko. So these are just, again, examples of your commodity and their income elasticity. Now, we also have the concept of antitrust and cross-price elasticity. So, the number of close substitutes may be an important determinant of the degree of competition in a market. So, as I balik-balik na og mention, no, di ba, if mas makadaghan ang imuhang substitute, mas dali ra nga mo change si customer or si consumer, di ba? So, muna it is an important determinant. Now, the fewer the number of close substitutes that exist for a product, the greater the amount of market power possessed by the selling firm. Again, greater the amount of market power possessed by the selling firm. Unsa ni nga mga firms? Again, these are those firms that are selling inelastic na mga products. Diba? If maka-remember mo ganiha, katong mas inclined sila nga padakan ang prices sa ilahang products tungod kay kahibaw sila nga gamay ra ang substitute ana. So, walay mabuhat si consumer kundi mupalit gihapon sa ilahang product. So, meaning mas dako ilahang market power. Now, an important issue in antitrust cases involves the appropriate definition of the relevant product market to be used in computing statistics of market control. So, example, cellophane only or all flexible na packaging material. So, kani is in relation naman yan sa imuhang statistics. Now, the empirical illustration of price, income, and cross-elasticity. This is the last topic already. So, a study examined the elasticity of energy used by residential, commercial, or industrial users. Now, the authors hypothesized that the demand for electricity was determined by the price of electricity, income levels, and the price of substitute good, which is a natural gas. Now, mao ni ilahang nakuha na results. As you can see here, diba, the residential market, commercial, and industrial market have the following price elasticities: 1.3, 1.5, and 1.7. So, as you can see, their price elasticity for price elasticity of demand for electricity is relatively elastic. So, whether residential, commercial, industrial, elastic siya. Now, this is meaning with the high price of with the higher price being in the industrial market. So, kung naka sa industrial, mas sensitive sila to changes in your electricity. So, this is of course consistent with the fact na since industrial man siya, mas heavy ang usage into electricity since na kay mga factories, mga power plants, na kay mga industrial machineries, diba? So, mas grabe ang imuhang gamit sa kana nga kana nga product, or in this case electricity. So, if ever maski naaray gamay nga change sa price sa imuhang electricity, since daghan man ang gamitan nimo ana, so mas more likely inclined ka to find a substitute. So, in that case, maunang mas ganahan ka mo gamit sa substitute. In this case, it is natural na gas. So, kana siya. So, you can see, another thing is, if you will notice that arita tanaw sa cross elasticity, no? Sa natural gas, again, it is positive siya, 0.15. So, meaning, electricity and natural gas are substitute goods. Kay since positive man ang imuhang elasticity. So, kana siya. Kanipod income elasticity, of course, mas dako man og income ang imuhang industrial market. So, expected sad nga mas higher ang ilahang or mas elastic ang ilahang mas elastic ilahang income elasticity of demand when it comes to electricity. And last na gyud, the combined effect of demand elasticities. So when two or more factors that affect demand change simultaneously, one may be interested in determining their combined impact on quantity demanded. So meaning combined na, di ba ganiha, you have price, you have income, you have advertising, di ba? So if mag-combine na daw ka sa mga determinants, mo na siya. The combined use of income and price elasticities can be generalized to include any of the elasticity concepts developed earlier in the chapter. So I don't know if na-show or di mo siya ma-show here. So ang pasabot is imura po tong combined ang katong changes sa imuhang price og sa imuhang income na elasticity. So, for example, di ba, again, let's change this to a pen. Di ba, if adto ta sa imuhang price, can remember your teka lang ha. Di siya, sige. So, you have your quantity change. Spare my writing. Quantity change in demand sa imuhang price is your elasticity of demand multiplied by your percentage change in price. Kani siya isa price ni siya. If sa income kanira ilisan class mahimo ra ni siyang y dire if income. Para di na tawon suot balik. So, di ba na siya nya kani dire kay mo y pud ni dire. Kay income naman, elasticity of income naman. So, now if assuming that the price and income effects are independent and additive, so meaning imuha rang of course the quantity demanded in your next period, again because na may change, would equal to the current period na demand plus the changes caused by your price o income. So basically kani imuhang price plus income pud nimo nga formula ari. Maura na siya imuhang percentage change in quantity demanded. Di ba? Inana ra siya. Maura na siya. I-add ra nimo, that is again if independent and additive siya. But if dili is nana kay mga lahi na formula imuhang gamiton. Kay again remember kani siya is mo suffice ba ni siya under ceteris paribus. So kani lang duha if i-plus sa duha is independent pud ang y. So meaning the change in the percentage change in price has nothing to do with the percentage change of your income. Maunang na-add na nimo siya to get the total percentage change in your quantity demand. Maunang pwede nimo siya i-add ha. But generally, under what do you call that? Generally is if dili independent ang both determinants, dili independent ang both determinants is least likely siya nga ma-add nimo siya. Di siya pa nimo na mahimong additive. So, mo na siya ang imuhang Demand elasticity. So again, you have the price, income, the cross price elasticities. So expect that in this chapter, you will encounter computations in your quizzes and exams. So that would be all. If you have questions, i-post lang niya sa forum.